What is your thought on Bitcoin being called digital gold?
I know. My personal opinion on Bitcoin is that it's going to go to zero.
Wow.
That's my personal
Tell us more.
My personal opinion.
Wow.
I think that the US is in a rather unique situation, a $39 trillion debt. It can sort of get away with it, but it can only get away with it if interest rates are relatively low.
What would persuade you to change your mind on the Bitcoin to zero view? I'm pleased to welcome to the show here at Consensus Miami, David Tait, CEO of the World Gold Council. The World Gold Council is renowned for a number of important facets in the financial markets, among which they are one of the inventors of the GLD ETF, one of the largest ETFs in the world, with $200 billion of assets under management, and the largest gold ETF. We'll be getting his view on not just gold, but the entire world order. What is next for the global economy, and why should we pay attention, and what we should pay attention to as investors? Welcome to the show, David. Good to see you.
Thanks for having me.
I'm David Lin.
Bonnie Chang.
Gold at $4,500. How is the world different today at a $5,000 gold regime than it was 5 years ago when it was at $1,500?
I think the difference between $1,500 and $5,000 is accounted for by the realization that we're in a situation where our debts keep growing across the world. Public and private debts, sovereign debt, continues to grow. I don't believe gold has really been driven by wars, interest rates, and tariffs and things like that, which have been transitory. There have been small movements when those things have happened, but if you look at the most consistent thing that has run through the gold rally, has been an ever-increasing fear that the US and other governments are adding to their debt, and at some point that will become unsustainable. You may remember that when Mr. Trump announced his Liberation Day tariffs, and you remember all markets declined at the same time. There was this point at which the US yield curve, instead of steepening, which it normally does, it jumped as a whole. And that's the point I believe Mr. Bassett stepped in and said, calm, calm, calm. Because if the US yield curve does jump as a whole because of lack of trust in the US dollar, you may remember those comments, the US would find it very, very difficult to fund its debts going forward. And that was when everything had to calm down a bit. I believe that's the main driver of the gold price, because people are far more savvier than they were, and largely been driven, even Asian central banks have been buying it for those reasons. That's what I believe. The rest comes and goes. They'll come, wars go, even, and it sounds crass, but it's true.
3 years ago when I first, or 4 or 5 years ago when I first started covering this space, the commodity space, I remember asking analysts and economists what the world would look like if gold were to reach $5,000 within 3 to 4 years, within 5 years. The answer was almost unanimously that we would be probably talking about this in the context of some catastrophe, with the extreme example being we would be in a bunker having this conversation. Now, to what extent is this analysis right, and to what extent is it wrong? What did they get right, and why are we not in a bunker today?
We're not in a bunker today because, very much personal view, the fact that we haven't reached the point at which that spiral occurs when the interest cannot be afforded. The US is about to go through $1 trillion worth of annual debt repayment. It's enormous. If that yield curve shifts and interest rates go up, let's say you have an enormous inflation spike that forces everything up, that cost does reach a point where it runs away. And then it becomes quite a terrifying scenario. How do you solve that? It's the bunker moment. Because what do? Do you all sit around a table and forgive each other? The wealth destruction across the world is immense. So I think people in the know are very scared of that point coming. And when you see various governments spending on even if it's defense, which is necessary as an example, you're seeing longer dated yield curves keep tipping up, keep ticking up, keep ticking up. Some countries are better than others, and you keep seeing the gold price continue to appreciate. So were they right? Yes. Are they going to find it in a war? No. Will it be a tariff? No. Will it be another tweet? No. But the one thing that runs all the way through it, a bit like managing your own finances, my own finances, is everybody knows how to run something correctly. Everybody knows you can't keep running up debt. Everybody knows there's a crunch day. It just is. And that is what I think has been driving the gold price. I will say that I believe central banks, who have been the main driver over the last 3 years, particularly Asian developing central banks, or shall I say developing banks, have looked upon it the same way. Their currencies are very vulnerable. Their economies are quite vulnerable. They're the ones who have seen bond defaults and currencies having runs on them, etc. So they've been accumulating gold. To what extent will remain to be seen how far they go. They're the ones who have been accumulating gold to stabilize their economies because they look around the world. They look around the world and they see the incredible amounts of debts that have been accumulated. That's what I believe is the main driver, and I believe it's been borne out in all the evidence that we've seen so far. Tariffs. I mean, how often, as an example, do we hear the comment, nuclear this, nuclear that, with Mr. Putin? Markets don't budge. Don't budge. Tariffs barely budge.
One final follow-up, and I'll pass it to Bonnie. Do you believe that a sovereign debt default would occur in the West, particularly the U.S. or other G7 countries? You mentioned developing countries within Asia. Could it happen here?
I think that the US is in a rather unique situation, a $39 trillion debt. It can sort of get away with it, but it can only get away with it if interest rates are relatively low. It can fund itself. It can fund its debt burden. It is a deficit, a current account deficit of 7.5%, 8%. That's too high. It will keep adding 1 to 2 trillion every single year. And at some point, that interest rate, if growth falls, won't be sustainable. They'll have to do something. And do I see them defaulting? No. Does the US default? Will they try and inflate their way out of it? Perhaps that's what we're trying to see here. But do I think other countries could default? My own, for instance, which has got its back to the wall financially, has no spare cash, needs to reconstitute its defences, and can't find its way to stem fiscally, to restrain itself fiscally. Is it likely to have a run by the bond markets on it? Yes, absolutely. I don't want that to happen. I don't want it to happen anywhere. But there are many countries across Europe that are highly indebted. And frankly, the ECB, there isn't enough money to bail out one or two of the bigger countries. They're all in the same situation. They've got lousy demographics, large number of non-producing people. They've got very low levels of growth and productivity. And the only thing they keep resorting to is printing presses. And that is why your gold bugs of the world, and I don't want to be pejorative, rational human beings in many respects, are resorting to putting a portion of their portfolio at least in gold because of its longevity. It proves it's a survivor. And it's hard to see where the world growth is going to come from that will allow people to start reducing their debts. That's the thing. And with this conflicts where we're having to spend more money we don't have, etc., you can see where the bunker mentality does come from, simply because you can't come up with an answer.
Before we continue with the video, let's talk about a company that's building serious gold leverage for the long term. Our sponsor today, Stellar Gold, is sitting on 3 major Canadian projects. Tower and Colamac are among the largest undeveloped gold sites in the country. The Tower project alone could be worth $2.5 billion after tax at a $3,200 gold price assumption. And if prices go higher, so does its value. Colamac spans over 1,000 square kilometers of greenstone deposits and could be Canada's next big gold camp. They also have Hollinger Tailings, a cleanup project that could deliver near-term cash flow. Across all projects, they've drilled over 16 million ounces of gold, which would cost over $2 billion to replicate today. With a seasoned team, Stellar Gold is one company to watch. Scan the QR code here on screen or visit stellargold.com/David Lin to learn more.
I've heard the statement that gold is the true money, everything else is IOU. Is that true?
I see why they would say that. Fiat currencies have been wonderful over the years, have been depreciating endlessly because you can keep printing them, as you know. And it relies on that faith that you have in its divisibility, its transferability. But of course, the fear is, I don't know if it'll ever materialize, the fear is that it loses that trust. That moment when the Liberation Day was announced, there was a ripple through the market of loss of trust in the US dollar, loss of trust in the US as an institution. It was discussed for the first time, credible or uncredible, it doesn't matter, but it was there for a moment and it scared everybody senseless. So, does a physically backed product appear attractive in scenarios like that? Absolutely. The one thing with gold is there's not enough gold in the world to reverse Bretton Woods, as an example, so couldn't happen. But as long as you have a digital gold product that is physically backed and can be redeemed in a physical form, whatever that form might be, you end up with something quite solid that doesn't devalue. And that's where the comparison comes from.
What is your thought on Bitcoin being called digital gold?
I know. My personal opinion on Bitcoin is that it's going to go to zero.
Wow.
That's my personal opinion.
Tell us more.
My personal opinion.
Wow. Yeah. Ouch.
It's
Tell me
not
more.
because it's an anti-gold thing. I think if you have gold in your portfolio, you should have Bitcoin, and vice versa. If you have Bitcoin in your portfolio, you should have gold. I think it's because it's you've noticed in most of the crises that Bitcoin is a very correlated with risk assets in general. I don't think it meant to be that way. I thought it was meant to be an offset, something that you could compensate for having exposure to risky assets. It's meant to disassociate itself from risk assets, and it didn't really do that to that extent. And so if you have gold in a portfolio, which I think everybody should, because it does the opposite of everything, simple as that, then if you have Bitcoin and you're a Bitcoin lover, it makes sense to have gold, and vice versa, because they offset each other. My personal opinion is that I see a use for stable coins. I see them in an institutional level, very much so, whether they're asset-backed or whether they're real-world asset-backed or otherwise, or fiat-backed for their various uses. But I can't see how it's going to be sustained in the very, very long term.
You're talking about stablecoin or Bitcoin?
Bitcoin.
What would persuade you to change your mind on the Bitcoin to zero view?
I don't know. I don't know really. I don't know if there is anything.
Would there be a use case that one would have to demonstrate to you?
No, because it's interesting you ask, because you could make the case for fiat currencies. They rely on inherent trust.
Sure.
And they also rely on the fact that there is a central bank that's going to come to the rescue. Big institutions will bail it out at some point in the future. They just will support.
Not to beleaguer the point, I had an economist on recently, and I'm paraphrasing, I don't remember his exact words, but he said, gold is a shiny rock. Those were his exact words. There is no intrinsic value to gold. There is no, the value that we've assigned to gold, 46 or 47, whatever the price is because somebody else is willing to pay that price for gold. That's all it is. And that's the same argument the anti-Bitcoiners use. I just find that very applicable to the yellow metal itself. How would you respond to that?
No, I see why you say that. Except, and I know that most people who, let's say, look at discounted cash flows for equities as an example and can price these things perfectly, how they would very likely say that. And I think I know the same people who've said those things. But I would say that they're missing a large portion of the world who do think of gold as an intrinsic store of value. They see in of itself, China, India, there's billions of people out there who wear it as it's their only source of value. I accept that you could look at a piece of metal and say it doesn't have anything. You could look at a dollar bill and say the same thing. You could look at a diamond, the same thing. But so I would say that those people who think that it is an inert, useless piece of metal are valuing it under the terms you would an equity or a stock. You can't produce a discounted cash flow. You can't create an inherent value. But as I said on a podcast recently, you are missing the 3, 4, 5 billion people out there who think the opposite. And that's why I think it goes up.
This reminded me of something. So last year I was at the Binance Blockchain Week, and gold supporter Peter Schiff versus Bitcoin supporter CZ. what CZ did, I don't know if you know them.
I know Peter Schiff. I don't know
CZ is the founder of Binance. What he did was he pulled out a gold bar and he asked Peter, is this real gold? Peter said, I don't know. And CZ said, if it was a Bitcoin, you can verify it right away. But with gold, you don't know.
You have to test that.
So is that not a flaw?
If you can test it, can you test gold instantly side by side? It would take longer to prove that gold is okay.
Mm-hmm.
But in the ecosystem that we are creating, the provenance of the gold and the integrity of the gold right back to the mine site can be proven. Yes, it is a bit Heath Robinson compared to Bitcoin and coding. I accept that. But that mechanism is there now. And we can prove where it's come from. It can, once it's in this ecosystem, can be relied upon and can be proven that it is what it is and be resourced responsibly and all those. But it is a real world physical asset. And there's only so much you can actually do to that point. But it can be proven to be 4 nines, 5 nines gold at some point. But right now, if you were holding a gold bar and I couldn't touch it, I wouldn't be able to tell, no. But it can be proven.
We'd like to learn a little bit about you, but before we do that, just one question. Why are you here at a crypto conference?
Exactly. Well, and that's the question I'm waiting for. Thank you. We are the World Gold Council. Let me explain. Is a collection of a body that represents the large-scale gold mining industry. Okay. I have 31 CEOs on my board, and my job, through virtue of GLD and GLDM, the funds that it gives me, is to improve the gold market, sustainability for gold, and also instill it with trust. As part of that process, and because I came from a world where I shut down commodities trading at Credit Suisse and all that sort of stuff, my role is to try and make gold usable to the institutional world and everywhere else. And as part of that, I've got to try and lower the barriers to entry to the market and make it more like other asset classes. The way in which we're doing that is largely speaking, to begin with, a few years ago, was to digitalize the ecosystem, improve the ecosystem in London from copper wire to fiber optic, literally the functioning of the market. And most recently, we're trying to address the situation as to why don't gold crypto assets, gold stable coins, gold tokens, depending on your phraseology, why have they been a disaster? Why have they not worked? If you look at the AUM included in those asset classes, compared with other AUM, they haven't worked. A couple of billion, $4 billion in the world. To you and I, it's a lot, but not to the financial. And why is that? We spend a lot of work trying to figure out why that is. And I won't go into I could go on forever, but what we are creating is a system called Gold as a Service. It's going to be a platform that will allow the complexities of the physical gold market to be accessible or to be overridden by a digital layer that this community and others will be able to back into to create gold products of any shape and size. For instance, it's very difficult to start your own stable coin. You've got custody issues, you've got compliance issues, you've got a whole variety of different things that are very expensive and complicated to do. And you will have seen the Paxoses, the Tethers, the JP Morgans, the HSBCs have all got their own little silos, but they essentially don't communicate, they don't function. If you want to buy a JP Morgan, you can go and do it, no problem. And it tracks the gold price. What do you do with that? Nothing much else, okay? What we're going to create is this platform, and we are creating it with our own money, such that all the noise and difficulty that you would have setting up your own product is taken away. Think of the Apple store. You create your own, Apple's done most of the hardware and all the worry, all the difficult bits, but the rest is up to you to create your products. This is not just for tokens, stable coins. They're for any other forms of product that anybody in this institution, this building here could lend themselves to thinking about. Redemption tokens, collateralized tokens, lending tokens, anything. But it will back into a gold market that is very simple, standardized, non-complex, one single price, simple, cheap, low capital, such that it'll be on a par with other asset classes, but in a digital way, a digital use, a crypto use. And that's why we're here. We're trying to popularize, obviously socialize this. We're going to be doing it during the course of the year. We should have a proof of concept produced by the end of this year. It's ambitious, but we should have it done. And then we've issued a white paper over the course of the last month, which I can give you access to. It's online. And we're trying to invite this community to come and play with us and use this platform to build products.
It's very refreshing that you said it didn't work, because iShares Bitcoin Trust, IBIT, reached 70 billion AUM in 341 days. But gold ETFs, the original gold ETFs, it was 4.6 years. So that was 5 times faster. But you said Bitcoin didn't really work.
Bitcoin did it. Yes, it did. It does. No, I didn't say it didn't work. I said that I didn't think it was going to last.
Right.
There's a difference.
Okay.
It does work. It works at the moment. It works fine. But my instinct, and it is my instinct, is that I don't think it will last. That's my gut feeling. And I don't really know. It's just very much a personal feeling.
Right. So
But
there's no reason behind it.
No, there's no reason I could think of. It's just my personal opinion, just instinct as a trader.
I trust your instinct because you've climbed Mount Everest 5 times. I don't think any of us could have done that. No. Can you tell us the story?
Yeah, it's basically I have been raising money for a charity in the UK. I've been closely affiliated with. It's called the National Society for the Prevention of Cruelty to Children. It's an anti-sexual abuse charity. The reason I have been is because my childhood was awful, and I've used it publicly. It's public knowledge. I've used it for that reason, and I eventually found that I'd exhausted every other way of raising money, jumping out of planes, all this, crashing cars, and I decided I would try and use that mountain. And so I rocked up in 2005, climbed it, went back every other year subsequent, and raised just short of £10 million, 15 million bucks for this charity by climbing. And I don't like climbing.
You don't like climbing?
Wow.
No, I hate it.
I thought you were going to say, I'm passionate.
What is the mental
It's cold.
fortitude
It's
one
miserable.
has to have to force himself to climb the world's tallest mountain if one does not enjoy the activity not once but 5 times? Like, what is that? What do you wake up in the morning, you tell yourself, I'm going to do this activity that I really don't like, and I'm going to make it the hardest thing in the world, and it is literally the hardest mountain in the world. What is that conversation like?
I did it because the very first time, there was a part of it, without too much detail, I lived below the 0 line because of what happened to me as a child, mentally, shall we say, emotionally, or happiness has always been below the line. And then in 2005, when I decided to use that as a vehicle to raise money, when I succeeded, not only did I raise 10 times as much money as I thought, instead of 20 grand, I raised 270,000. I also felt brilliant for literally the first time in my life, literally. And I wanted more of that. And so I decided to go back in 07, raise 300,000, 09, etc., accumulating this money for the charity. But I also felt semi-trapped because it's cold, miserable, you poo into barrels, it's horrible. And I didn't much enjoy that. I enjoyed the kudos, but it became less about me climbing the mountain and more about the benefits I was bringing to children, without sounding nobler than now, that sustained me. And then in 2015, I tried to climb K2. I got to within that far of the top, but the weather killed us. And when I decided to go back in 2017 to climb Everest, no one gave me any money. I was all sponsorship money. They'd got bored of me, and that gave me a chance to stop, which was quite a relief. And then I just speak on behalf of the charity now, and I find get myself above the line by doing it that way, as opposed to climbing a dumb lump of rock.
My final question to you before I pass to Bonnie, what has a near-death experience on Everest taught you about appreciating life?
That's a good question. Until I experienced my near-death experience on Everest, I was ambivalent about living, without getting too heavy, but I was. And then I got caught in an avalanche. And as it slammed into me, and I was underneath the snow and rock, really, I was so scared is hard to describe. And if you've never been terrified, you really don't know what that's like. And I was carrying a flag from the Queen to the summit that year. And I remember being under the snow and thinking, wow, ow, I've broken my leg because my leg was killing me. The Queen's going to be really pissed. I'm not going to get her flag to the summit. The second thing I thought is, your world, your past life really does flash in front of your eyes in a few seconds. It does. It's strange, but it's like a collage. And the third thing I thought was, I don't want to die. Until that moment, I hadn't been tested. And I used my other arm, which this one was broken, and I pushed myself out of the snow. And from that point on, I decided that I was going to throw everything at life and make sure that I enjoy what was left of it, because my childhood had left me sub that for too long. And so all this work and this projects and stuff, I now treat as my new Everests and put myself thoroughly at the front of. But yeah, a strange story. Thousands of Everest stories, I'm afraid. Quite interesting ones.
I've actually binge watched a lot of your documentaries and interviews. And I want to know what changed after that. So you said you appreciate life more, you don't want to die. But how does that change your everyday life?
It changes in strange ways. Can I say most recently, I've found out I was ill, very ill, 3 years ago. And I have now come out the other side of it, 100% clear, which is wonderful. But much like that, it gives you a new perspective on life. I've never, as I said to someone the other day, to many young people, jump, don't worry about where you land. Life is short, you can achieve things, you've got to be brave, you've got to have the confidence to take these chances. And I spend a lot of my time talking to kids and young people and trying to get them to not be fearful, to understand that life is too short to be worried. You've got to take chances.
You are extremely successful, and I want to know what drives you.
Yeah. Funny people said, when I entered Goldman Sachs, back when I was a 21-year-old, I was perfectly suited to that environment at the time, early 80s, because I didn't care if I lived or died. Without sounding dramatic, I didn't care. And so I was able to take risks and gambles, considered risks and gambles, that others were not, and they couldn't understand how I could do it. When you don't care, it's easy. It's not bravery. It's just you don't care. And it suited me. I was perfectly made for that. And then I reached the point where I've been questioned throughout my life. Do you think what happened to me as a child has helped you in any way? And looking back, I can say yes. It created a single-mindedness, a almost can-do attitude that perhaps seems irrational to some others, but it also made me realize that it's given me the ability, and I keep using this phrase, to jump and enjoy the ride. I remember when I was at Credit Suisse, I was in a board meeting one day, the investment banking board meeting, and suddenly the CEO came charging in, you won't mind me saying, and said that the Credit Suisse doesn't exist anymore, it doesn't matter, does it? And he said, we've just had our capital cut by 50%, the IB capital, in one go. And there were 20 people around the table, and every one of them were like headless chickens, and there was papers going everywhere, and there were sweaty, existential looks. And I remember sitting there, looking at them, and thinking, you guys have got no idea what bad is. Because if you've been somewhere really awful, you find yourself capable of doing rather extreme things without having the same reticence others. So I think it helped me in a strange way. I'd much prefer not to have gone through it,
David,
but I think it helped me.
We appreciate your contributions, and I thank you for your time today.
Thank you for having me.
Thank you.
Thank you.
My pleasure.
Thank you so much. That was
Thank
great.
you for watching.